All right, guys, welcome back to the channel. Bitcoin's hit another new all-time high today. It's the third day in a row and the second day of a new all-time high closing price. Yet there is crickets out there. Not many people really talking about the price of Bitcoin compared to where it was about a week or two ago when it pumped up an impressive 10% in a day. That is another key warning sign of things to come. And I want to share that data with you today, along with a huge question that the majority of you guys have had: where to put your gains at the end of the cycle. Of course, I'm going to cover all of the data in today's video, but I think it's important to prepare for that, even if it is 6 to 12 months away, because some of these things do take time to play out in your portfolios. Now, if this video ends up going a little too long, I suggest you go over and subscribe to the free crypto and economic report. I'll be putting updates over in our free Discord that you can find over here in TIA updates. Along with that, you can go and check out TIA reviews as we've got Black Friday coming up next week. A few guys are tripling their trading accounts in a matter of weeks as they follow specific trading plans and trading strategies that we teach in TIA Premium. You're at your home of macro cycle analysis. It's me, Jason Pizzino. We're looking at Bitcoin, crypto, stock markets, and the real estate cycle. And as I said, most importantly in today's video, we want to cover a lot of this next 6 to 12 months for Bitcoin, data points that you can look out for, very, very simple stuff, and what the end of the cycle looks like, at least looking back at the previous historic cycle of the real estate and the economy. All right, so I've got an agenda for us today, a few big special topics to look at. And with that in mind, I might not cover this in today's video, but I'll bring it back in the next video ahead, just so that this one doesn't go too long. So let's look at the Bitcoin data for today, sentiment research, price analysis, as we always do, and then I'll get into these topics above here. So this is the overall cycle. You guys potentially know this already. If you are new to the channel, make sure you hit the subscribe button. I continue to put out more and more information about this, what to do during the cycle, what to do at the end of the cycle. And of course, at the end of the day, it's entirely up to you. You take it or leave it or develop it into something that works for you in your own portfolios. This is essentially just building upon my own 18 years of experience, starting from real estate, then into commodities, then into Bitcoin and cryptos in 2017. So in terms of where we sit, winner's curse phase, it's the last phase of the 14 years up, which began roughly around 2010 to 2012 and looks to end around 2026. That doesn't mean that we go up and straight down. It could just be a bit of a rounding top, and we don't necessarily see huge gains in real estate or the economy not really sort of going as hard as it has been over the last few years, according to the data, no matter which political parties you love, just according to the data. We'll leave this for the next video, as not much has really changed in the traditional finance space over the last 24 hours. So let's cut it straight to Bitcoin and cryptos, looking at the market sentiment. The exchange volume has dropped off again. However, we're still at elevated prices, and it's the highest reading it's been for a very long time, basically going all the way back to 2021. So still up there. You'd expect some sort of pullbacks all the way up. Next is the liquidations, also looking good. It's good to see more getting liquidated at this time, not in a sense that I want people to lose, but anytime a market, no matter which market it is, stock markets, real estate, as we're getting pretty highly levered into real estate now, with banks creating more credit, with the way that they are giving out smaller or bigger loans on smaller deposits, governments giving out handouts, that is all creating leverage and more credit in the system. Essentially, you want to see that washed out regularly. Otherwise, it creates a very unstable environment. And that's what leads to the peaks in real estate. That's what leads to the peaks in the stock market. That's what can lead to peaks in crypto, Bitcoins, of course. And that same thing happens time and time again. So yeah, we're basically seeing good liquidations here. Next up on our list, we're looking at search volume, and I've added another couple into the mix today, just looking at crypto and DeFi. Starting with Bitcoin, it's the easiest one to see on the chart here. It is climbing up. Obviously, we've seen Bitcoin go to another new all-time high price, and the search volume is climbing slowly. Slow and steady wins the race. But slow and steady at this stage is really what I like to see, and hopefully you do as well. I know everyone wants to make these big gains and get the hell out of there, but if that happens, you're playing with fire, up and down. Who knows when it ends and who knows when it comes down. It happens pretty damn quickly. But this slow and steady is much nicer. It's a few percent a day. And I'll show you how that leads to peaks over and over again. It's either top peaks or basically pauses in the price. So yeah, Bitcoin's looking pretty good again. Green is crypto. That's also on the rise here over the last 24 hours. It has been a pretty good indicator of when money's coming back in and when you're getting peaks. When we're looking at the trend volume here for the words in Google Trends, you can see we had peaks back on the 11th, 12th, and 13th of November for BTC. There's the 11th, 12th, 13th. That was basically the peak there. And then we had a correction. And you can see from this point, yeah, the price has gone higher, but it hasn't gone high like these days here where those big pumps happen. So it's potentially a little more sustainable longer term as opposed to just pumping straight up and then coming back down. But at the end of the day, we'll let the chart do the talking and just continue to follow up with the swings. So Bitcoin looking good, crypto looking good. If we want to get down to DeFi and AI, we'll remove these two. And you can see that the DeFi term has dropped off today. Not as many people that interested in that narrative. I know it does come up a little bit, but what people are more interested in are memes. So I put DeFi in there as a reference point to compare it to memes. If you're sort of stuck in 2021 looking at DeFi, do note that more people it's getting close to more people searching for meme coins over DeFi. You're at 32 on memes and 52 on DeFi, with a DeFi declining and memes increasing. So essentially if they meet, that means you've got the same volume of people searching, or the same search volume for meme coins as you do for DeFi. In terms of the red here, you've got AI, so it's climbing up. So at least that's in an uptrend, more people searching for that as well. So that narrative seems to be sticking as meme coins have done as well. The fear and greed index, 82 again. We're up at 90 and then dropped to around 83, 82. Bitcoin is still climbing in terms of price. The extreme greed is still up there. And like we've seen before, it can remain at these elevated greed levels for a considerable amount of time. And that's typically, if it can get over the 1 month, it leads to around that 2 months. Now, within that 2 month, within the longer period, you have around 2 months in extreme greed, like we saw back here. Then there was a washout, and then it came back to extreme greed for roughly another 3 to 4 weeks before the show was over. So that's why I often refer to roughly 2 to 4 months. But the 2 months was basically all in greed. Then you had the washout, and then you had basically another month there. So call it around 2 to 4 months, but you will see potentially some extreme fear come back in within that period of extreme greed. That doesn't mean the price goes below previous significant lows. It's just putting in a higher low. As for the ETF flows, which has been a fantastic contrarian indicator for when tops come into the market, or at least that steam runs out from the masses, we've also seen the ETF flows drop off lately. And that, of course, lines up with the pricing on Bitcoin. Big pump up, and then you don't see the same sort of move to the upside. We are grinding higher, but it's not the same sort of thing we saw earlier. And you typically see these sort of guys come in towards the end of the move. 18,000 and 12,600 BTCs on that day. So now we're back down to around 8.8. So I think we're starting to build a higher low. So basically like an average area of inflows that for this stage of the cycle would be above all of the rest of what we saw in 2024. Although we're seeing a slowdown in the sentiment, it's still looking positive. There's always going to be periods where you do get corrections, and corrections come across the board. People aren't going to be interested at the same intensity every single day. I'm not, you're not, and it goes for basically every subject in our lives. We're not as interested at the same intensity every day, and that goes for this as well. Next up is the USDT Dominance. We've been tracking this for months on the channel. It's had some pretty good rejections, which have shown times where Bitcoin has put in lows. And then as this dominance drops, you see more of this money flow into Bitcoin and cryptos that are pushing the prices up over there. So we're at a very critical, pivotal point here for the USDT dominance. I'll get it right one day. Basically right on the support line that has held the market up for 7 years, going back to 2018, 2017, we'll call it 7 years. So at this point, 4.2% is the critical level. Next up, 3.8%. And basically the last 24 hours really has just crept down slowly, which has also shown that Bitcoin has been creeping up slowly. So if this does break down, well, that's pretty straightforward. You're going to see pumps, Bitcoin, and those stronger altcoins. And if it doesn't break down and we finally get a bounce from here to come back and test some of these lows, well, then you're going to see some of that money come out of Bitcoin and cryptos, people taking profits at least in the short term. And the average true range is dropping off. This has been a pretty key indicator that shows when these tops start to come in. Each of the cycles have shown many multiples above the average true range. What the average true range is the daily bars and what the average of the last 14 of those bars are. So you can go back to 2020 or any year, it doesn't matter. You're looking at the red line here, then this number up here. So $800, $1,000, and you can see it start to creep up. 2,100, 2,200, 2,600, 3,600. And so it becomes unsustainable for the range of these bars to continue to get greater and greater. So it helps identify when the market might come to an end, or at least you can use this moving forward to see how much further it's got to go. Like basically how much energy are in these moves. One thing we can do is measure the timeframes with how long these moves take. So you can look from say mid-December through to mid-January, and you've got a pretty fast move, takes a month, and then it has to slow down from that point. It basically goes sideways, doing a similar sort of average bar day, big pump up, and then not much from that point. You can see it basically rolled over from there. So I suspect something similar will happen towards the peaks again, unless we are like 2017, where it just went ballistic into the peak. How long did that last for? Well, you can see end of November to around end of December, mid to end. So you had about a 3 to 4 week period. Now this does keep all of the bars in. So it doesn't matter whether it's going up or down. You're just looking at the average true range of the bar, which means how much energy is in the market. And it could be energy to the upside and it can be energy to the downside. So in terms of multiples here, you can see from that mid-November to the end of the move, it was about a 300, 280, 300% increase on the average bars. Where are we currently now? Well, right now we are below some of these tops. We're still finding some resistance in terms of the average true range. But if we take a measure and go up half of that amount, so it's 280, 300, call it 150%, that would take you out to about a $9,000-ish bar, $9,500 bar. With Bitcoin in the 90,000s, that's about a 10% move in a day. So things can go bigger. We get that. We're just looking at averages here to identify when these sorts of moves can basically stop. And one thing I went through on the chart for my analysis today is just looking at how many days in a row can Bitcoin do X multiples until it pauses. And one of the one of the percentages, one of the significant percentages was anything over 6%. The longest it's done that for is about 3 days in a row, typically 1 to 2, but the most it really does is 3 days. So going back to the most recent pumps, we got November 6th, it did 9%, and then it paused for 3 days. 4.8%, so it didn't hit the 6%, did one more day here at 10%, and then basically price paused and has been climbing slowly. So when it does these days, it doesn't happen more than 3 days in a row. So if you're coming into the end of this after say 2 of these days, it's very unlikely that you're going to see a third day up with a similar sort of percentage. So that can help you save a lot of money by not FOMOing in near the peaks. So when you can start to add some of this research and analysis together, it really does help you and saves you a lot of money, heartache, emotions towards the end of moves. So we had a couple of big days here. Basically, the market's gone sideways. Now, you could argue and say, well, what if I just got in and at the end of the day, I would still be up? Yes, but that doesn't happen very often. So you could say this time it worked, but the majority of other times it doesn't necessarily work. And on top of that, we still don't know whether this is going to keep grinding higher to 100, 120 and never come back to this level, or is it going to find a peak soon and then start to retrace? So you could have got in, but you just had to have patience. And like we know with the markets, the majority of people do not have patience. That's been proven time and time again. And if you do have the patience, well, then you've got an edge in the market. So I could go back and show you how these moves happen. You can see here, you got 5%, 4%, then one day here, 9.5%, pauses. Another day here at 8%, big reversal. Slow climbs up, 4.4%, and basically nothing happens from there. In terms of it coming from lows, different story. You can see here we had 11, call it 12% out of the August low. And yeah, it pulled back, but it pulled back into higher low, then another higher low from here, and then obviously the market's taken off from that point. So we're really looking at it in terms of the FOMO that comes in towards the end, because I can tell you there wasn't as much FOMO on the 8th of August as what we saw in the move to the upside, but the price was basically at the same levels, trading between 50 and 60K. So yeah, basically just look at those as the market moves up. You've got 3%, 2%, 4%. As it starts to get a little bit crazier, sometimes it's just best to wait it out and get that next entry when the market is not thinking about the next big pump, because it typically doesn't happen. Now, with that knowledge of the average true range of a bar and the time analysis that we've done on previous videos, which is again a big shout out to subscribing to the channel if you haven't already, and like the content if you do enjoy seeing how this comes together. With that knowledge, now you can start to see towards those peaks, and when price gets to the price projections. One of the big price projections that I'm looking at is $122,000 for reasons of price extensions. Okay, so we've looked at price extensions and why that's the case. So if the price is getting to those levels, and on top of that, you can see the swing starting to slow. You can see the range of the bars may have had a few pump ups to that point, and then starting to slow as well. You can start to add all of these tools into your toolbox to say, maybe now isn't the greatest time to be aping in as we approach time targets, price targets, and the market is getting overextended in terms of the range of the bar. You can apply that same analysis for your altcoins, but you'll have to go back and check the altcoins in terms of how much they typically do in an average day. And if it becomes much greater, like in terms of a multiple greater than the average day, it might be cause for concern to at least scale back on any sort of investments from that point. We dive over into the next topic. Never before in Bitcoin's history has this happened, something to be aware of for 2025. We're looking at timeframes from the lows to the lows. So we have around 4 years low to low. That's the 4-year cycle that I look at. I'm not looking at Bitcoin halving cycles or things like that. Just where does the peak come in within a 4-year period? Is it coming in on this side or this side? And at this stage, we're coming in on the right-hand side, which means you've got a longer bull than a bear. Now, in terms of the bear, we have the 6-month forward returns to look at for BTC. Here's January to June, July to December. A really simple one here, just something to be aware of, which I'm definitely going to take into consideration because it hasn't happened before. How many green 6-month periods can Bitcoin stand? So here's the 6 months. In history, it's only done 5 in a row maximum, and then it gets a red. So this is the data here. We can go back to 2010. This is using the TIA indicator suite, and you just want to click across to the forward returns, drop it onto semi-annually, and then Bitcoin here. Link to this is in the video description. So 2011, 10 and 11, green, green, then a red. Green, 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 green. So 2012 into 2013, 2 years straight, green. Then there was 3 reds in a row. So 6 months red, 6 months red, 6 months red, which is 18 months. Then you had 5 in a row. So that's 2.5 years. Green, 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 green. Then 2018 happens. 1, 2 reds in a row that basically brought down the market. 1 green, 6 months, then a red. Okay, so 2 in a row, green stopped it. Then you had a red period here. Move forward into the next cycle. 1, 2, 3, 4 greens in a row. So basically we're looking at how much energy can a Bitcoin market take before it needs to pause and consolidate before the next period. And this has all the data going back to 2010, including those big moves in the earlier cycles in 2013. So 2022 happened. Well, we had one 6 months red and then 4 in a row. So 2 years. 2022 happened, red and red. So basically straight down for that entire year. And then came 2023 when everyone was talking about a recession and how bad things had to get. Didn't happen. Here we go. 2023 was green and then it was green. So we had 2 6-month periods. Basically the whole year was green. Simple as that. Now we're in 2024. We've got 1 6-month period already green. That's confirmed. And we have, call it 6 weeks left of 2024 and of this 6-month bar. We're up 50%. If Bitcoin was going to crash from this point, it would have to go back below call it, where's the open? $62,600. So it would have to go all the way back down here from this price, would be roughly around a 34% correction and close under there in the next 6 weeks to make this a red bar. Now, to me, this scenario seems pretty unlikely, which would mean that we've got 2025 to come. So 2025 over here, can that be green? That first half of 2025. If you start to see the market run up and then in the 6 months pull back, that would be a red 6 months for the first half of 2025. So you'd have 1, 2, 3, 4. I think we can all confirm that we're going to see 4 green months. Obviously it hasn't happened, but that's why I'm playing this. If 2025 did end up like that, well, you'd have 1 red and then it would reset it, and I think you'd start to see things go again. However, if we saw this sort of head up and then the first 6 months of 2025 do that, then you'd have to ask yourself, are we going to see a 6th 6-month period in a row go green for BTC? Now, it doesn't have to be the worst thing in the world if you did see a reversal here for that final piece. Maybe it does head up for the July, August, September, and then start to come back down towards November and December. Now with these 2 bars drawn up a little clearer, you can see that it seems like we might get a green for the first half of 2025, and then we'd have to wait and see what happens in that second half. In that second half, you could see the price run up. Everyone gets super excited. Call it 150, call it 200, 300, doesn't matter. I don't really care. The point of it is, if this thing runs up pretty hard and fast, you can expect a pretty big reversal from that point. You can see this sort of happening here in 2021 and 2022. Big move up, and it just held out. Tried again, and it was another weak close, and then basically you got this crash happening. So 2025, something to be aware of, especially if the narratives start to pile in that this time is different. Trump's on the case. He's putting in some sort of crypto representative doing something in the government. US is talking about taking Bitcoin on as a treasury, some sort of ridiculous rumors. That sort of crap can really build up the anticipation of prices never coming back down. So we're aware of the data now. When that narrative flips and things go pretty damn crazy, which is what I think is going to happen in 2025, just come back to this and think, is it possible? It's never happened before. What are the chances of it? It's, of course, everything's possible, but what are the chances of that happening, especially at a time when we're looking at the end of the cycle coming in and somewhere for the real estate prices to start to peak around 2026, and then you start to see things come down from that point. We'll revisit that at the end of the year and then also look at it throughout 2025. As for now, total cryptocurrency market cap, getting back to that tipping point, still holding out. We're seeing quite a lot of altcoins pull back at the moment. Not surprising because we're back at the previous resistance levels. I think over the 2024, we're going to see this thing start to move again, but we are seeing a little bit of selling off here for some of the majors. ETH still holding out at a good level, but it is dumping down to new fresh lows against its BTC value. And that's, from what I can see, is pretty much coming up to the same sort of timing as each other cycle. Now, every day we've covered this, it's been a new low. We're just waiting on any sort of signs of a reversal. That comes in the way of obviously hitting the low, but ideally you want to see this swing low start to form a higher low and then at least take out some of these previous resistance levels or previous support and obviously flip it from resistance into support again. So ETH BTC still on the decline. and pretty well within the same timing as previous cycles. Solana also taking a pause here against USD. It is actually at a new all-time high against its Aussie dollar value. You can see there was 351. It's jumped to 366 at a high of 388. So I think it's inevitable that we're going to see a new all-time high for Solana versus USD. On top of that, ETH versus AUD still holding out here around 4,700. Dogecoin 58 cents. XRP $1.71. But you got bigger gains there on your Doge. So congrats to you guys who wrote in the comment section where you flipped your XRPs and your ADAs for something like Doge or even Sui, which has done fantastically well as well over the last sort of 6 to 12 months. Everybody drunk out on the dance floor. Well and truly up, going up from around 50 cents to now $3.50. So what's that, like a 7 times, 6-7 times. That's the sort of thing you'll be wanting to get through these cycles and getting rid of some of those dead coins or coins that only pump for a small period of that cycle and sort of getting those bigger gains. Now, last thing is, what do we do at the end of the cycle, the financial collapse? Now, I've just filmed an entire mini masterclass on what to do at the end of the cycle. Basically, that financial collapse. Where do you put your money? Is it the stock market? Is it gold? What do you do, and how do you, more importantly, how do you decide what to do with that money? Now, the segment has actually gone on quite long, and I know I did promise it in today's video, but I am going to give it to you guys for free as I promised, and it will be in the free Discord. So just subscribe to the free Crypto and Economic Report. Link is in the top of the video description. Check your emails, check your spam, click on the links to get into Discord, and it's going to be under the TIA updates. You'll see it right here, along with all of our other updates about the markets, whether it's Bitcoin, cryptos, the stock markets, real estate. You'll see these other updates here that Michael and I post. That's it for today's video. Like, subscribe to the channel, and go check out the free Discord for that free mini masterclass. See you guys at the next video, or in Sydney on the weekend at the Australian Crypto Convention. Peace out.